We're live.
A coffee milkshake. I am
like an ice cap is like a coffee milkshake. They're terrible for you.
But that doesn't mean that
sugary. I think they have like
amazing.
It's like a coffee with 40 grams of sugar. It's like disgusting. I mean, they're tasty, but it's a dessert. Like it's a dessert, and don't think of it anything other than that.
Well, you can't say that they're tasty and disgusting in the same sentence.
No, I mean bad for your body. They're tasty.
Okay.
Did you guys know you cannot get diabetes just by eating sugar and cookies and cakes and stuff like that?
Huh?
You have to you have to have a 5.7 level of hemoglobin blood sugar inside of your blood in order to get to 5.7 or above. If you're at 5.6, you can't get it. 5.7 or above, you have to genetically be born with the diabetic gene. That doesn't mean eating sugar can't enhance the gene from coming up early in life, but you could eat like 1 billion cookies, and if you don't have the gene in your body, you cannot get diabetes.
Isn't it?
Sounds like you're confusing type 1 and type 2.
No. This is I spoke to a cardiologist last week because my dad's been going through some heart stuff. We sat down for an hour, and I was like, "So how do people get diabetes? Because it's really a cardiovascular disease." And he was like, "Anyone who says you can get it from eating sugar is fucking an idiot. They're just like they don't understand anything." He's been a doctor for 80 years. You have to be born with it. Now, if you're born with it, and let's say you start eating sugar in your 20s and it pops up, the sugar could have caused it to pop up earlier. But if you don't have it in your body, no matter how much sugar you eat, it's obviously the sugar is not going to be good for you, but you can't get diabetes. You can't be pre-diabetic, diabetic A, diabetic B, anything like that. It's crazy, right? Because all your life we're like, oh, if you fucking eat a honey bun or something, you're eating diabetes. You know, people make that joke. That's not real. Like, you have to have a diabetic, and usually it skips a generation. So my grandfather had diabetes, my dad doesn't. So I'm actually more likely to have it because it skips a generation. That's why I went to get my blood work done. But yeah, you can't actually get it without.
And how'd your blood work come back?
It's good. I'm not pre-diabetic, but he said that doesn't mean you don't have the gene. He says because my doc has the gene. It just showed up when he was like 40. So he's like, because I ate really well, I prolonged the gene from showing up, but I had it. And so eventually it showed up. So
okay, let's play a game. Let's play a game. The game is Riley wearing a hat right now? Dude, what is going on with your hair? Like, my hair is crazy.
Dude, I told you.
It looks like you're wearing a hat.
I've been growing up my hair for the first time in a long time. If you actually go back and look at the videos of me, like the very beginning of SoFi Weekly, I had no hair whatsoever.
That's true.
I haven't had a haircut like since then, actually. So I don't know.
Is Justin Bieber on the panel?
I think Kelly said I look 12.
SoFi.
So is there any SoFi news this week, or
a couple of downgrades? Down 10% today. Nah. Do we
So,
really want to talk about SoFi on the SoFi Weekly?
Go ahead, Steven.
Since SoFi hit $10, am I officially correct since I said it would hit $10 by the end of 2023? I never said it was going to stay at $10. So am I correct, or do I need to revise the statement?
No, you're right. You got it right.
All right. So then we're going to make a new prediction.
Okay.
Old prediction is closed out as a win. We're going to make a new prediction. SoFi 15 by end of the year.
Wow. Okay.
And I will put it in the next article I write. It's whenever I write it.
I don't even think that's that crazy.
And he will donate to charity if anyone says otherwise.
I mean, listen, I am all about making wagers for charity. I'm happy to do that.
Yeah.
I don't know.
Are you picking up any shares that Nvidia is down under 430 now, Steven? It looks like it's on sale now in the 420s.
Listen, my wager is still open to you for charity. If you want to do it. I mean, if you're shook, I understand.
I'm not confident in any sort of short-term price targets at all.
Well, neither am I. That's why it's called a bet and not an investment.
I know, but I don't have two apartments in Manhattan. I don't think we're in the same snack bracket.
We may be. We can talk
So
offline about it. But no, NVIDIA is an amazing company that is doing amazing things, and they're going to continue to grow their top and bottom line and continue to retain earnings and grow EPS. That doesn't mean that it's trading at a reasonable valuation right now. So we should just move on because that's a very long conversation.
So you want to talk about this shareholders meeting, Tanner? I think you covered this live. You want to discuss this?
Nope.
Why?
Yeah, the one question that was asked.
It was
Yeah,
4
it was
minutes
boring.
long. It was a 4-minute long
You
meeting.
still got to cover it.
Okay, so I'll cover it. It was 4 minutes long. They talked about a reverse stock split, and then there was one Q&A where they said, "How are you going to retain, I forget what it was, the shareholders' confidence that the stock price will stay up or something along these lines." And Noto said, we're going to continue to make great products or
They,
something.
voted, they voted against the stock split, though, didn't they? The board didn't give him approval.
I think so. Yeah.
Which is wild because the last two times we voted on that, well, actually, maybe just the last time, it was 90% of people voted for stock reverse split powers, which is wild. So that changed a lot since the last time we voted on it.
Who has a party going on in the background?
Oh, is that me? Y'all can hear that? There's live music outside my house.
It's pretty good. Good music.
If it's annoying, let me know.
It's annoying right now.
You just mute yourself when you're not talking. That's all. That'll solve it.
Tanner.
Yo, Tanner is so bro. I love you know. So for those that didn't see Finance Junkies, we saw the real Tanner. Now he's all calm, relaxed, kind of nonchalant. His insults are more diplomatic. But on Finance Junkies, he was saying Google's not a real company. He's like,
Dude,
he has something like that.
He has certain trigger points, and Google is one of them by far.
So let's stick on that for a sec. So we're saying that a company that has 26 billion in cash on hand,
Steven came prepared. He was ready for this.
And
Sorry, Mr. Next point.
115 billion in current liquidity on hand isn't a real company because Tanner believes AI is going to eat search's lunch, which is the majority of Alphabet's revenue, correct? To some degree?
To some degree, yeah.
Okay.
Yeah. So to some degree, I think it'll I think as I was thinking about it after the podcast, I think it'll be very similar to PayPal. I think they're going to have margin compression and it's going to get rated from a growth stock to a value stock. And that could lead to some. So I wanted to reiterate because there was one person that was talking in my comments and gave a clearer view to what I honestly believe. They changed my mind. They said, you know what, this will probably be a pullback till 2025. And then the ratings from 2025 will be the new Google, and then it'll be investable. And I agree with that. I do think that there will be a change in the stock value similar to PayPal, and then it'll be re-rated and it'll be a much cheaper stock.
Okay. So let's see what the analysts have to say about this. You have 44 analysts calling for $5.
I don't care about the 44 analysts.
Hold on. 44 analysts saying 534 in EPS this year. 43 analysts saying there's 17% year-over-year growth in EPS at 627 and 24. Then 21 calling for 737 in 25 with another 17% year-over-year growth. This is a company that is generating in the trailing 12, not free cash flow, bottom line after taxes, $58.58 billion in net income, and last year's $76 billion. So if you don't think that this is a company that can't use their retained earnings to grow new profit centers, that's crazy talk.
Well, I think that they could have, and they've been given multiple opportunities to diversify like the rest of the big FANG companies have, and Google has been the slowest to react and do anything other than search.
Bro,
and
this is so boring. Get your own podcast, you two.
I know, and we might actually. We're thinking about a growth versus value. where you just listen to Steven say trailing 12 months.
No, but you bring up PayPal and Google or Alphabet in the same sentence.
This is
When
how
you look at the amount of profit that PayPal generates.
Yes, get
they're
Tanner heated.
generating
Get Tanner
no
heated. We need him
Steven,
heated.
this is how I think we're going to finish this. The reason why, if everyone agreed with me on Google, I wouldn't have such a strong stance. So bringing up a whole bunch of analysts' expectations of what I think, like I'm trying to think of what is going to be the surprise in the stock. What I'm saying is obviously contrarian. Okay, so you can't bring up 44 analysts that obviously disagree with me. You know that's
no, but what is the street? Yes, I can, because every earnings report is based off of consensus estimates by these analysts. So I absolutely can bring that up because it's whether they beat or miss earnings. That is what companies are judged by these days.
But the guidance can be based on whatever you want. The actual real earnings that come in whenever the company actually reports is what the stock moves on. So I don't care what guidance has to say. I care about what are the margins that Google's going to be taking on over the next 4 to 6 quarters. That's what I think is important.
Google has missed earnings twice in the past 20 quarters.
Okay, but
90%.
this new problem of ChatGPT developing since November is not in the past 20 quarters. So I don't like the trailing 12 months because the 300 million customers that just left has left this quarter.
Okay, but Tanner, even if they generated no profit, broke even, they have over $100 billion in cash.
Wait, what is gain no profit? Sorry?
Even if Google made zero profit next year, okay? And net income was flat, free cash flow was flat. Hypothetically, not going to happen, but hypothetically, they still have over $100 billion in cold hard cash on the balance sheet. They have the resources. PayPal was never in a position that Google was from a cash perspective. So it is two completely different stories. They're just too big at this point not to figure it out and develop new profit centers. If they don't, it'll be one of the most epic failures of a company. And it could happen, but the probability of that happening is probably less than Google figuring it out.
All right,
they just
so
have too much cash on hand to figure it out.
Just looking at the chat, do you guys want to pivot back to SoFi? Just saying.
Sure.
Go ahead, Tevis, take it away.
Sure.
I'm so like I rolled out of bed for this podcast and I'm so tired.
But all you're doing is just killing a good debate to talk about no news that has happened.
Well, okay.
We could talk about some potential catalysts that are going to happen in the near future.
Well, we had 3 downgrades in what, a single day, something like that.
So dumb.
And not only did we have 3 downgrades, but the interesting part was that they all raised, or most of them raised price targets too. So, like, are they even really downgrades at that point? You know, if an analyst says, "Oh, it's no longer a buy, it's a hold," but then goes from 6.5 to 8.
Can somebody explain what a price target is for me?
12,
I know
12 months
what it's
out. It's 12 months out.
12 months out,
Yeah.
right? And what is it, like 95% of them are always wrong?
Well, they have so the analysts are always going to follow the stock price. Like,
so what's the
choose
value of a price target? I don't get it at all.
Yeah,
price targets are excuses.
The weird thing is we got good price targets like a couple days ago, like the $14 one, and I think
but this is
$10
why,
one.
right? Because
and then we got. Well, this is what I named the podcast. I said SoFi shoots up to 10 before greedy analysts downgrade to get more stonk at a cheaper price. I feel like that was
dude. Even that I wanted to talk about today. Like,
that's a good title. What are you talking about?
Talk about your title.
Analysts are protecting their downside. They're coming in with different predictions that are going to be harder to.
They're trying to get the stock cheaper. That's the only thing that's happening.
Dude, but the thing is, like, these price targets that analysts have been hit already in June. Like, if you look at some of these analyst price targets, they're at 6, they're at 7, whatever. And so if I blew through all of them, all of a sudden they look like idiots if they don't raise their price target, and then they raise it to, like, 12, and then SoFi goes back down to 9, and so then they lower it to like 8 again, right? And shit, like, it's always
they're not called raises; they're called revisions because they didn't make a mistake. They're just revising their
Well,
their initial
didn't
assumption.
Oppenheimer was the one, and like Oppenheimer, granted, has like a pretty decent analyst. They raised it or revised it the week before the rally to $10. So when was it? On Monday, I think we were at 10. So last week they raised it to 10, and then this week again they made it 8 or I think 9. Like you can't, and this is my thing with, and this is why I got on David Cavrini's ass too. Like you cannot change price targets weekly, man. Like what the fuck is the point of that? Like change price targets whenever you have new data coming out. Price targets are supposed to be some type of discounted cash flow or some type of valuation forecasting model that is based on actual company fundamentals, not short-term price movements.
Well, to give David a little bit of a I don't know, free ticket here, out of jail or get out of jail free card, is that the $2.50 price target that he put and then the $3 price target. I think the separation between that was the debt agreement. So that is news. That's massive news. And so we raised the stock price by what, 20%?
Wait, so he raised it from 250 to 3 due to the debt agreement? That's the upside that he found.
Sorry, student loans coming back. It's a guarantee that student loans come back.
Yeah, okay, that makes sense. It just, I guess, in a percentage
Riley,
basis,
whenever.
on a percentage basis, I guess that's a good raise. But on an absolute basis, like he thinks student loans coming back still warrants a $3 target.
Yeah, well, I don't think he can. He would look like a real idiot if he went from $2.50 and then went, you know what? It's actually back to $8. You know, so I think he's definitely wrong regardless.
Look, the real telltale will be when the new 13Fs are filed and we see who's buying and who's selling from the big institutions. And these really large volume days, we'll see if it was retail or if it was actually institutions adding to ETFs and mutual funds.
What, because I saw the comment or the question in the chat somewhere. How far do we think this pullback is going to go? Like, where do we think it's going to settle? Because personally, I think that like $8, I don't think we break below 8 unless we go into a macro downturn. And sure,
can we open a yearly chart? Because every time this happens to Sofi, it goes straight down to 4 or 5, like every time.
Yeah, I can bring that up.
Yeah, but you got to remember something. Some people are long-term investors. Some people bought in as a new long-term investor and just went up 100%. A lot of people, well, I shouldn't say a lot, some operate in the methodology of when you're up 100%, you take your original investment out and play with the house's money.
Yeah, I mean,
so
like, didn't
for
Chris
SoFi
sell a
to take
portion?
that type of a run up, that could be what's happening too. And there's nothing wrong with that. It's a smart way of protecting your downside.
Tanner, I'm sharing your thing.
Thanks, buddy. Yeah, I mean, if you really want to zoom out and look at it, I'm not a charter or anything along these lines, but I mean, it does do a lot of these peaks and then pull back pretty quickly
But
everywhere.
in all fairness, in the other times, something always happens. Student loans got pushed off. Something always happens.
Very true.
And I'm not saying that it's not going to fall this time, but this time, I do think it's falling for other reasons. I think it's profit taking, not a blow to student loans or something else getting pushed out.
Yeah, I think there's too many catalysts over the next couple of months with student loans, gap profitability. There's a lot of stuff coming. I also think the sentiment around the stock has changed, and maybe I'm naive for that, but I just think in general there are people that are much more excited about the company, given the growth prospects that have come on. We haven't even seen the effect of them acquiring Wyndham. Like, there's so many things for them to show. Noto on these calls and these fireside chats, he's sounding more confident just in terms of deposit growth and where the business is going. So I think we got the price target increases for a reason. And I think if it falls back down below 8, it would be purely macro, but it could definitely get there.
Yeah, well, that's the thing, right?
Sometime in 2024, regardless of how Powell sounded this week, it is probably a likelihood that they're going to start cutting rates at some point next year. And once they start bringing rates down, you're going to see increased activity in the home market, which is good for SoFi and other companies.
Yeah, I mean,
didn't they say they were keeping the option open to even raise rates at the end of the year?
They were Powell was pretty adamant that the consensus, I don't want to, this is not quote, it's generalization. Most of the Fed members feel that there is at least 2 hikes coming this year.
that's
I have
bullshit.
the exact quote in one of my articles.
This is bullshit.
And what have I been telling you though? They need to establish credibility. They have none.
That's what I'm saying. They're doing it for credibility.
They're not going to cut this year. Maybe they don't raise. Maybe they're just staying hawkish, but they're not cutting this year.
If they're done raising 2020, there's going to be a Santa Claus rally. It's going to be nice.
Remember, they are looking at trailing data. They had a pause this month because they know they're looking at trailing data. It's all data in the past.
So they're definitely not hiking when inflation goes to 3.2%. Like there's no.
But exactly. There's a good chance when they go to Jackson Hole that inflation is in the low 3s or even high 2s. Maybe
they need to dig themselves out of Jackson's Hole or wherever the hell they are and look at the real data because they're not fucking hiking. Like that's not happening. Tevis, why are you laughing so much at my jokes, bro? Like I feel like I'm on a first date with you. I just make you laugh like crazy. Like this is ridiculous. Goodness gracious. By the way, I went to get sushi with someone over the weekend. And the lady brought up the miso soup, and I was like, "Miso happy," and the girl started laughing. I'm just saying, she started laughing.
You started texting me, and I told you should be paying attention to your date.
I was like, "Steve, I'm out right now." He was like, "Pay attention to the girl." I was like, "All right, fine." How did Tanner disappear? Where the fuck, Tanner? What's going on?
Hello? Okay, there. I was disconnecting and stuff. Everything just froze. I don't know what's going on.
Yeah, let's do a little shuffle, a little musical chairs. We're gonna put me here. I know me here is weird. I'll go back there. Steve will go on the bottom.
Oh my god.
Steve's definitely not a bottom. He's a top. Never mind. Riley's bottom. Okay. Yeah. So the downgrades, it's most likely just not going to happen. I mean, the downgrades are happening, but I don't think the stock's going to $6-5 again. Like I think we had an opportunity to get it at 5-6. I don't think it's happening again. But if it does happen, then
But look, if you're a long-term investor, does it matter? Like, no, sure, I mean, you could have sold this week, and if it continues to go down, you could have bought the same amount of shares for less money. Timing the markets is so frustrating and so difficult that half the time, or even more than half the time, you screw it up somehow. So you know what? If it goes down and the gains I've seen in the past 2 weeks, 3 weeks go away, so what? I'll buy more. Like I am holding for the long term, unless something changes my investment thesis. You're buying a piece of a company. You're not buying a stock. You're buying an equity position in a company. You don't sell. Nobody sells a private business because of headlines. It's crazy.
You remember the Warren Buffett quote of the crazy guy coming knocking on your door, asking to buy your home, and he continuously lowers his price? I'll buy your home for $600,000. No,
okay. Mr. Market. That's a Ben Graham thing.
Okay.
But it's true. I mean, I wish more people looked at buying shares in a company instead of buying a stock, because you're buying an equity position in a company that gives you a percentage ownership and a percentage of the revenue and a percentage of the profits.
Why would you put
That's what you're laughing at.
Yo, bro, Tevis, I don't get what do you have is your body made with funny bones or something? Like, how do you just look, now you're laughing at that joke too. You fucking
you bring up a comment from 30 comments ago.
I'm just saying, how do you laugh at everything, bro? This is ridiculous.
Just a happy person, motherfucker. What do you want?
No, you're not a happy person. You're definitely not a happy person. There's no happiness there. All right. So is there any other SoFi news this week to talk about?
No, it's just
yes. I want to say something that's really, really cool. A really cool mile marker for SoFi. By the end of the month, we should probably know whether or not SoFi is in the top 100 U.S. banks in America.
How?
June 30th.
So every quarter, about 8 weeks after each quarter, the Federal Reserve Board updates their list of banks and how big they are. And in 22, like September of 22, SoFi was the 184th biggest bank in America. Then in December, it was the 150th or 49th. And then in March, at the end of March, it was 114th. So it's been getting very, very close. And there was somebody on Reddit that just posted his thoughts on it, and basically saying by the end of this month we should get the updated ranking, and SoFi should be in the top 100 U.S. banks in America, which is awesome. Like, that really gives us a lot of credibility. It's going to be really cool.
That's by deposits, right? What is that list by? It's definitely not by market cap.
It's probably deposits or total assets.
Deposits.
Right. Don't they take like 6 weeks to actually put out that report though? Like, it's not going to come out June 30th.
It's always at the end of the month. So like September, it was on the 30th. December was 31st. And then the last one in March was on the 31st as well. So it's
but that's not true. They just put out the March one like quite recently, right? It was like in May that it dropped.
Really?
Yeah, it's just the dates that you're looking at is the date that it reported to, not whenever it actually releases.
Okay. Well, I might be wrong about that. Regardless, some of the people on the SoFi Reddit was some of the people that do a lot of research there were all saying that at the end of this month they should have the numbers up. Could have the numbers up possibly. So I don't know. Something to think about.
It'll be an exciting mile marker for sure.
Yeah.
But honestly, it's just a slow news week. Like, SoFi is continuing to truck on, and I totally agree with what Steven said, is that if it does drop down, like it sucked watching SoFi go down to $4 a share, but actually holding on to it at those prices and continuing to buy, knowing that it recovered, was an amazing opportunity. And the company's not getting any weaker as the stock price goes down. Like, this is still an amazing company with what's turning into a lot of tailwinds for them in the near future. And that's really exciting. And so it's a quiet time. Like, it was a quiet time just for like all of fintech today. There was no one was reporting anything. Friday, everyone went home, I guess.
Well, I have a question for you guys then. Like, have y'all noticed? Because I have noticed this a lot. When we were talking about SoFi at $4, everybody was silent. There was nobody talking about SoFi. But like, just recently, I've been seeing like so many Twitter accounts asking people to follow them about their charting. Like,
that's
like
because we're at $8, dude.
Well, welcome to the stock market, though. That's just every stock. People buy when it's green and they sell when it's red, and it's the opposite of what they should do. But that's the retail market for you. And that's why the majority, the high majority of the average investors make, like, on average, I think it's like 2.5% per year. And it's
yeah. Look, most investors would be better just buying an S&P index fund.
Oh, by far. By far. But
we're not most investors. Yeah.
I don't even think it was like that slow. So I think that when we were in the 5s and 4s, like, there was more actually company specific news that were coming out. In the last 3 weeks that we've just been rising, it doesn't seem that there's any bit of news. Like, Noto's not really buying, or there's not really any specific new like product offerings. Like the SoFi at Work matching was the only piece of news we've had since the middle of May, really. That's company specific. But it's still been exciting because, like, don't forget, man, Monday was when we hit $10, wasn't it? Like, yeah, I think Monday was when we crossed $10, and today we closed at like 8.5. It's been so volatile. There's been so much volume, and the stock has been moving like $1 a day, basically, either up or down, which is crazy to see.
Do you think that's because of the actual share price, though, that people or like Noto and team don't really have to push out or buy shares? Like, if he's buying shares for confidence and the stock price is already running up to 10, does he really need to buy more shares? Or are people, like, you know what I mean? Maybe he can take a day off from buying shares and just focus on company specific things, making longer or bigger products, I guess.
I think that Noto buying shares is a tool in his arsenal to stoke up enthusiasm and optimism. and hope around the stock. And realistically, I mean, when he doesn't need to do it, then I don't think he's incentivized to. But if the stock is at 4, like, why would he? Because if he buys shares at 8, 9, 10, whatever, it becomes such a normal thing, and he can't use it anymore for when the stock falls to like $5. Like, he doesn't have that in his arsenal anymore.
So remember, he started buying shares on the open market around $14.50.
No, $9.
No, he made 4 purchases. You can, if you go to Open Insider, I do not have it open. You go, put it up on the screen.
I have it here. His first purchase was at like $9.90 something cents.
Was his second purchase was at 14? He did 4 of them back to back to back. It was 7,500 shares each.
As far as I can see, wait, give me one sec. I'll have it up in a second. The highest that I have it here is $9.96. That was his highest purchase.
That's not accurate.
And he bought 15,000 shares for $149,000. His lowest was $4.29. His first 4 purchases were in 2020, August of 2021 at 1378, 1446, 1393, and 1431. 7,150 shares each transaction. August of 2021. Those are his first 4 purchases on the open market.
I don't think it really matters like that much. I mean, I think looking at it at a higher level.
At that level.
I know, but like looking at it,
he doesn't need to buy anymore because his cost base is now, where is it? Somewhere in the 5s? He's got it down to.
Right, but what I'm saying, Stephen, is like if we zoom out directionally, he always buys when we're down and to the right.
Yes,
that's my point. And that's perfectly fine too, though. I mean, that's practically how I've been doing my purchases, so I don't know. So that's one of the topics that I really wanted to cover is are you guys buying at this price? Are you waiting for lower? What are you guys doing with your shares?
I mean, I should have done what I wanted to do. I said to Amit that I wanted to sell covered calls on my shares. I didn't. I'm probably going to sell some cash secured puts at a lower price.
No, isn't it good you didn't sell covered calls? Because it was running up like.
It's bad.
No, but what strike did you want to sell them at?
Like 11.
Oh, it ran up to 10. So if you had sold covered calls at 7 to 10, you would have lost the share.
Yeah, no, I wanted to sell covered calls the other day out a week or two to 11 because I thought that they were really high premiums. I decided not to in case it kept running. And
so that's a good thing. I mean, it could have kept running. You never know.
Yeah,
it could have easily kept running.
You never know. But as far as buying more shares, I don't think I'm going to just buy shares. I think I'm going to get paid to buy shares. I think I'm just going to take the cash I would have put in, sell cash secured puts. That way, if it hits a certain price, I'm forced to buy shares, and I get paid a premium to do it. Because you know what? If I say to myself, I'm going to buy X amount of shares if it hits 750, why not just sell cash secured puts for however many shares? That way, if it hits 750 in that time frame, I'm forced to buy the shares, and I get paid for it. If it doesn't, expires worthless, I still got paid to lock up my money.
So I don't know if this is the right stream to do so, but I've been continuously telling people to sort of, show me a little bit more about options and stuff. Cause I'm just purchasing shares for the most part and just companies that I love.
Go to Yahoo Finance, bring up an options chain. I'll run you through it right now.
Guys, but we should be careful because you don't want people doing any of this stuff because this shit is really complicated.
Explain what a covered call
is. Yeah, no.
Do you know what a covered call is, Tanner?
Sorry?
Do you know what a covered call is?
Yeah, I know covered calls, cash secure puts. I'm aware of all the, what they do. What I don't know very well is, where
the value is.
What are the rules for, how you're actually placing them out of the money and just allowing yourself to make a slight dividend?
So he collects the premium.
Let's not explain until we have an option chain up for anybody who's following on.
Yeah, but
Steven, bring it up and just email it to me.
Somebody go to Yahoo Finance and type in SoFi and just click options.
Dude, I can just explain it really simply.
Yeah, so can three of us, but
All
for
right,
people
explain it.
following, it's easier with a visual.
All right, let me pull it up.
Hold on.
Where's options saying? Oh, here it is. Okay. All right, we've got Yahoo Finance, Sofi, options.
All right, Tevis, take it away.
Hold on. I'm gonna actually get you, Amit, an options profit calculator here. Look at this link in our private chat, Amit.
Yeah, no, I've never really dabbled in options. It's just a thing of I've always had the time on my side because I was so young that I was able to place very long term bets, and so I didn't want any expiry dates or any sort of timelines on my shares. So the thing with me is that I could never predict macro. I don't believe anyone can. If you can predict three interest
Agreed.
rates or where interest rates are going to go 3 times in a row, you'll be a billionaire.
Agreed.
And
So, Tanner, I'll tell you exactly what I do. Okay. Let's just use 100 and 1,000 for argument's sake. Every option contract is equivalent to 100 shares. Let's say you buy 1,000 shares. You have the ability to write 10 cover calls. So on 1,000 shares, I would take 300 or 400 shares and use that as an option play around a full position and just write 3 cover calls. So if it's at 9 and I don't want to lose the shares, I go out of the money by maybe $2, sell 3 or 4 contracts at 11.
Steve, you didn't explain what a covered call is.
Okay, so you are selling the right to somebody else to buy your shares on a certain date at a certain price. So if I want to create a dividend from a cover call, I sell 1 contract to SoFi, which is the right to buy 100 of my shares on July 1st at $11. If it hits 11 or more on July 1st, my shares go to somebody else. They pay me the $11. It doesn't matter if it went to $20 or not. I get that $11. If it doesn't make 11, you keep the premium and the shares expire and the contract expires worthless and you keep your shares. So I try to go as far out of the money as the premiums dictate where I still make a good premium because I don't want to lose my shares and have the tax consequence. So that's what I like to do.
Throw up that website. I can't throw up because my computer will like explode. But like, let's walk through what, like Steven's actual example, selling $11 calls. So yeah, covered call, SoFi. Right. So Steven is basically selling a call at $11, and he's collecting a premium. Is it weekly?
Select option and pick a date that's like 2 or 3 weeks out. The 14th is fine. Click on that.
$10 calls?
So the 10.50, I would probably do the 11s because you're getting 19 cents per share. So each contract, you're generating $19. So if you're selling 5 contracts, you're generating $94 in income.
So let's say the stock price is between 9 and 10.
Select the other visualization Amit. So not right beside profit loss. There's a line one and there's the other one.
Oh.
Yeah, but left. No, left.
Oh, sorry.
Yeah, that one. Okay. So now you can see green is you're making money basically, Tanner. And that's how much you're making. And that's
so from $9 to $10, that means the stock is below the covered call strike price of $11.
Yeah, go from 9 to 12 so you can see where you're losing money too.
Oh yeah, you're right. That's a good idea. Yeah, 9 to 12.
Tevis, did he pull up a grid though for if you're just buying call options on the other side? This is the profit on, from what it looks like, on buying the call options, not selling them.
No, this is the selling. This is writing a July 14th $11 covered call.
Okay.
Yeah. This is exactly what it's supposed to be like. So, this means from June to July 14th, you would theoretically make, if the stock goes to $12, $268, which is 32.2%, but your shares would get called away because it's above the strike price. So you would lose the shares.
That's not right. There's no way that's right.
Yeah, that doesn't make any sense to me.
That's not right. That's if you're buying. It's on buying the option. Even though it says right, it's on buying the options.
Let me change it to buy and see what happens. What the fuck? This gets even. What type of website? I used this website before. That's why it's being weird. All right. Well, that was a failure.
Yeah, I appreciate that, guys. So I'll just stick to my shares.
This is why you just never talk options, bro. It's something that you got to learn on your own. It's complicated.
I gotta say, I've had tremendous success learning about options from ChatGPT, because anytime I don't understand it, I just say, teach me at a high school grade level. And if I can't understand it, I just go down each
Explain
grade
like
level
I'm
in high
5.
school. Yeah, explain like I'm 5. So it's pretty easy to understand if you use ChatGPT.
Yo, TJ, you want to join and explain this shit, bro? I'll send you a link right now. If only there was someone who did this for a living and made millions of dollars with this strategy. It's painful hearing you guys. Well, if you
By
want
the
to
way, he has made a lot of money in the last month, like a crazy amount of money.
Yeah.
So good for you, TJ.
Wait, so Tanner,
Good for you.
you know what cash secured puts are, right?
Sure.
So basically, when you're okay, not really. So let me explain. This is the one I think I know decently, and this one is probably easier than covered call. So this one will be hopefully.
I have next to like zero interest in taking risk that has a timeline.
Okay, so this one actually is simple though. So basically, the philosophy of what Steven's talking about is how do I own a stock? But Tevin, stop fucking laughing, yo. You laugh at everything.
He loves laughing.
Steven is saying, how do I make money off a position, even though I'm not, even though if the position is flat or I'm not, making any profits off it, or it's below my average, or so it's like I'm in the loss. A cash secured put to me is the first option strategy I learned, and it's the easiest thing, to be honest, when it comes to options. I think it's even easier than covered calls. Let's say SoFi's at $10. A cash secured put, you would be selling a put into the market at, let's say, an $8 strike price. Let's say the market's giving you $20 or something like that for that. I don't know what percentage that is as a premium, but let's say you're getting $20 to do that. You would put up 100 shares as collateral.
Yeah.
So what's 100 times 8? $800. Correct? You would put $800.
Yeah.
You would have to put up the cash, right? One contract, 100 shares, $800. And basically, Robinhood or whatever brokerage you have, they would keep that as collateral. Now, let's say the option expires in a month or 3 months or 5 months, whatever it is. As long as the stock does not get to that price, that strike price, you get to keep that $20 premium that you paid for. So 20 divided by 800, whatever that is. I think that's like a 4% premium. I might be getting that wrong, but that would be the premium you get. And then Robinhood or your brokerage would give you that $800 back. Now, let's say the stock goes to $8 or below. That means you will be forced to buy those shares, and that is that means your collateral will be taken away. Now, let's say the stock goes to $7 and you have to buy it at $8. Theoretically, that's bad, right? Because the stock's at $7, you're being forced to buy it at $8. So, like, that's not a good thing. However, you got a premium. So, and you're long the company. So this is one of those options that's, I think, one of the least riskiest options, because if you do end up getting the stock, this is what TJ does. He makes like a couple $1 million just selling cash secured puts because he collects the premium. If the stock doesn't get to that strike price, you keep the premium. If it does get to that strike price, you have to buy the stock. But the premium you got plus the money you put in basically reduces your cost average, because again, you got that $20 initially.
Right. And if you're long on the company, it doesn't matter.
It doesn't matter because you want the shares regardless. Right?
Shares
No,
at $7.
I get that. I get that completely. I just find I take the worry out of it and let the brokerage do that through share lending, and I don't have to worry about fucking doing that constantly. Like this is what I spoke about on my
think about it. Would you buy
on my daily today, is that I'd rather just work and make that money, because my capital is not large enough for me to probably make that like an extra.
It's good at practice though.
Yeah, but
especially if you start building.
Don't think about it like that. The question is, if SoFi goes down, would you buy more? If the answer is yes, what's the price? So my question to you is, if it went to 7, would you buy more shares?
Sorry, I was reading chat. What'd you say?
If you're long on SoFi and SoFi goes down, would you buy more shares? If that answer is yes,
Yeah.
Would you buy more shares at $7?
Yes.
Okay. So right now, July 14th, a cash secured put at $7 is at 14 cents. That means for every $700 that you put up, you would get paid $14, which is a 2% return. So you're making 2% on that 700 regardless. If it never hits, you keep the 2%. If it hits, you get shares assigned to you at $7. Your $700 becomes 100 shares of SoFi, but you really paid $686 because you collected the $14 of premium. That is exactly how a cash secured put works.
Sure.
Yeah, see, the problem I have with that is in the States, it's easy because you have Robinhood, which is completely free.
Who uses Robinhood?
Or whatever,
I use
man.
Robinhood.
I don't care. Everything is free.
Ridiculous.
In Canada, you have
No, it's not free. You get charged. Trading stocks is free, but option contracts,
dude,
every broker
here
charges.
for options, we have straight up commissions that are like $20. And so I would need like
Shit.
exactly, right? It's like we're stuck in the
There's
80s.
been no incentive for me to learn at all.
Yeah,
But-
that makes it no incentive whatsoever. Unless
That's
you're
the
playing
thing, though.
free
Like,
bank.
I would need like 10 grand of SoFi to make like $100, and it doesn't like it's the juice is not worth the squeeze.
Yeah, no, I find there's still
All right, we have an expert. He'll explain everything.
TJ.
Oh,
TJ,
That's
how much
TJ,
money are you up
TJ,
on SoFi?
TJ.
How many billions of dollars do you have from selling premium?
well, hold on. Before we even get to that, can you explain what the wheel is so I don't have to, please?
Yeah, you're actually doing a great job. They just need to let you keep talking.
Yeah, thank you. Because I would love to explain the wheel, but I don't think they're going to let me without interrupting me. Because I love wheeling
So guys,
stocks.
so let's keep it simple. For those of you all don't know me, my name's TJ. I'm the world Geo. I sell puts, I sell calls for a living. So what you have to do before anything else is you have to pick a stock that you legit want to be long on in order for the strategy to materialize, because it takes sometimes 3 to 5 years to manufacture the win. Just legit. So all of you guys on this podcast here, I believe, are long SoFi, because I don't see. But first, Chris wasn't really long on SoFi, so it was fun to watch his banter on the screen. But I know all of you guys are on long SoFi. I've met Tevis personally. I've met Riley personally. Super long on SoFi. There's no way Tanner's not fucking long on SoFi. He knows everything about it. So he's definitely long on SoFi, and I know that Amit is as well. So you take a stock that you want to own, but you need to be able to assess the risk reward, right? You guys all use nerdy words like asymmetrical risk. You want to have more upside than less downside. So the way to generate things like that is to get paid up front just for agreeing to buy a stock that you want to own anyway. So with SoFi, we can agree that it has a lot of upside, but it's not a surefire thing right now. They're a small bank. They're going against the fucking NFL, like JP Morgan, stuff like that. Those guys control the narrative. So in order to minimize your risk, but still potentially have real nice upside potential, you would write a cash secured put. So you're essentially saying, hey, I don't have my wallet here, but let's just pretend this is my wallet because everything's on the phone these days. I'm willing to buy 100 shares of this stock, and I'm willing to collateralize my money to do so. How are you going to incentivize me to not be able to access that money for a certain amount of time? So let's say SoFi is trading. What is it trading at right now, guys? $9 or so?
It's at 860.
So 860. So I'd be like, okay, I think SoFi is a good deal at 860. But I think it's a hell of a deal. It's a steal of a deal at 750. So how much would you pay me just for agreeing to buy these shares at $7.50? And
that answer is 27 cents.
So you're going to pay me 27 cents for how long?
So July 14th. So you would get paid $27 on every $750.
Exactly. So ask yourself this: if you think a cash secured put is good in layman's terms, go to your bank. Let's go to our beloved SoFi, the 4.2 point, whatever the hell it is, APY. Y'all know these numbers way more than I do. I'm interested in making millions, not interested in knowing every little detail about the company. So let's look at this. Where can I put $750 for 1 month and get paid $27 up front to do so? For just agreeing to buy shares in a company that I want to fucking own anyway.
Yeah, so you're paying me 3.6% right now to do that.
For 1 month.
For 1 month.
That gives you 4% for the whole year, yes or no?
Yep.
There's a big difference. We're talking about APY. We're talking about APM here. We're talking about premium per month, PPM. So That's what I do for a living. I take a company that I want to own shares in. I want to be long on this company, but I have to minimize my risk because it's not a dividend paying stock. I mean, fuck, SoFi isn't even profitable yet. And I'm long SoFi, guys, to the tune of 400,000 fucking shares. So I'm long this company longer than probably anybody's ever been in your podcast. But I have to be responsible with my money. I have worked my entire life in the oil field, several businesses to accumulate this amount of money. I manage millions of dollars in the stock market, but I can't be that frivolous. I want to partake in SoFi, but I have to get paid to do so. The juice has to be worth the squeeze.
Basically, you're saying buying and holding at your level is just not worth
It's irresponsible on a company like SoFi at my level when there's apples out there, when there's dividend paying stocks that aren't going anywhere.
Yeah.
I mean, when a company is kind of like a verb, that company's not going out of business. You know, people can say what they want to say about Uber, but Uber is a verb. It ain't going out of business. FedEx is a verb. It isn't going out of business. SoFi isn't a verb yet, if that makes sense. So there's a lot of unknowns with SoFi. I'm long on SoFi. I've talked to these two guys eating barbecue at my fiance at the time. So now my wife's restaurant, my wife's family's restaurant. We ate some damn good barbecue. If you're ever in town, I'll treat you to Rainey's Barbecue. It's legit. But I was like, I wouldn't be long on SoFi if I wasn't making tons of money selling puts and calls on SoFi and getting all of that premium to while I let the investment thesis play out. So cash secured put, you take a company that you want to own and you put the money on the sidelines and you get paid up front a premium just for agreeing to buy those shares of stock. Now, if it dips to your strike price on that expiration date, one of two things is going to happen. You're either going to own the shares or you're not going to own the shares. If it's above your strike price, you won't own the shares. If it's below your strike price, you would own the shares. But the silver bullet to being the wheel deal and trading the wheel strategy successfully is before you do any of that, watch all of the videos on rolling in and out of a position. Because everybody's like, oh my God, I would never sell covered calls against my shares. And I'm like, why the hell not? You can get paid to change your mind. It's called the roll out and up. It's not that big of a deal. People just like to over dramatize things on YouTube.
Now, TJ, would you say most people that barely understand options, most of us here probably outside of Steve, we shouldn't engage in this as quickly? Or is there a certain strategy you would say to start researching first, like cash secured puts? That's the easy.
Definitely, the first thing you want to do is you want to do what you guys have already done with your beloved SoFi, my beloved SoFi, our collectively beloved SoFi, is research the living shit out of the company. Because whenever you're buying shares of a company, buying shares, you're buying into the company, right? We're all buying into Nodo. We're all buying into Nodo, right? I mean, fuck SoFi. We're investing in Nodo. Cut the bullshit already. It's not SoFi Weekly. It's I believe in fucking Anthony Nodo Weekly. That's what we're doing. That's what we're doing. We're believing that Captain Nodo is going to fucking sell this ship into the promised land. We're hoping that he's going to fly us into outer space and not crash and burn. That's what we're buying into right now because it's early in the game, but we're all super bullish on Anthony Nodo. Yes or no? Call me a liar.
That's true. That's true. That's true.
That's so true that it's a meme. It's called "In Nodo We Trust."
I think I started that too.
Really?
You did. I think you did.
I really do think I started that.
The dude's legit. Everything that he touches turns to gold. I have reason to believe that SoFi won't be any different. But anyway, we take a company that we want to own. We're going to sell a cash secured put, and we're going to get paid some money to do that. And we're going to do that over and over and over again until we get the shares of the company that we want for the money that we're willing to pay for the shares. And then once that happens, now you're legit long the stock, but you've already made some money along the way. You've manufactured a dividend. That's essentially what you've done. And then whenever you own those shares, you're like, okay, I got little houses here. 100 shares represents one contract that you can sell covered calls against. So if you were in the real estate business and you were buying rental houses, would you buy rental houses and not put a fucking renter in there? Would you buy a tenant? Would you not put a tenant in there and collect rent?
Makes sense, yeah.
Because that would be stupid if that was your business, if that was your line of work, and you're going to go buy rental houses and not actually put them up for rent.
But you lose your ability to trade those shares, whatever they're actually, you have cash secured puts on them, correct?
You don't own the shares. You're getting paid for the right, the obligation to buy those shares if it meets your criteria of the contract.
You lose the capital, Tanner. The capital is collateralized. So until
I need 100 shares to do so.
Yeah. So if a strike price is $8, you lose $800. Lose meaning it's stuck.
So I
until...
don't need 100. I don't need 100 shares. I need capital
Well,
of
you get
100 shares.
750
Correct.
bucks. We're talking about a 750 strike
Yeah.
price.
Okay.
Is there any way that we can pull up one of my Robin Hoods and we can walk them through an example?
No, because we got like 2 minutes left.
Okay, no worries. There may be another time.
TJ, I have a question though. Do you always stick with the same increment of time, or do you vary that up?
No, I have weeklies, monthlies, quarterlies, and I even sell lead puts. I call them backstop trades. I have SoFi puts for January of 2025 already, guys, because I'm legit long the stock. So if I have a good deal today, I'm going to think it's going to be a good deal on 24 January, 25 January, because it's very, very hard to change my mind quarter to quarter, guys. I don't really assess my investment thesis but one time a year because I don't got that kind of time.
TJ, can we go over my computer died? I don't know if you already went over this.
Sure.
But running a wheel on a portion of your shares.
I mean, you guys can continue. I can leave for counter, but you guys can continue this if you want. You can do that.
Absolutely. I can wrap it up and then we'll schedule it. And I'd love to join you guys down the road if that's okay. So cash secure put, you're going to get paid up front to buy shares. Essentially, you're getting paid to buy the dip in layman's terms. And then if that happens, you're going to own the shares. And then you're going to name your price at what would I be okay selling these shares if I didn't have the ability to roll? We're going to leave the roll because that's the silver bullet of this whole thing. It's the magic recipe. It's the secret sauce. We'll talk about that another time because we don't have time today. But you're essentially saying, hey, I bought these shares at 750. I know that they could potentially go to 10, but I don't think they're going to go there during this time frame. So how much money would you give me just for agreeing to do that? So you're getting paid money for agreeing to buy, and you're getting paid money for agreeing to sell. And that's how you manufacture the win. All the while, you're essentially, let's say 750 is the target price, your strike price. Your whole goal is to collect via cash secured put premium, cover call premium, at least $750. That way, if and when you choose to own these shares at $750 for 100 shares, you bought them with OPM, other people's money. And that's what wealthy people do to get ahead in life. It's other people's efforts, other people's monies, other people's ideas, and stay the fuck away from other people's opinions because that shit will make you broke.
That's the same line he said to every single client ever.
Guys,
that's really
OPM, OPI.
TJ, what's your average on those 400,000 shares now?
Of actual owning them outright, it's a little bit under 7, and my adjusted cost basis just hit the $3.50 mark.
What does adjusted cost basis mean?
When he puts in all the premiums he's gotten paid from.
So $3, that means you're up 3x on the stock.
You take what you paid for the shares, you subtract everything you collected via cash secured puts and cover calls, and that gives you an adjusted cost.
And that's like 2 years of all those premiums you would have to do to make it. And you have all that stuff mapped out, like you can get to that actual $3 number on like an Excel sheet.
Absolutely.
So you're up 3x on the company.
Correct.
But as the stock
marathon, I own my shares for negative $7 already, guys.
So theoretically, 400,000 times 3, you paid 1.2 million, but 400,000 times 9, you're at 3.6 million in total. Like that would be.
And he's still making income every week, every 2 weeks, rolling them in the wheel. Like
Correct.
The wheel is such a good strategy. Like if you have 1,000 shares of something, run a wheel on 100, 200 shares.
Fast.
Generate a dividend.
To your point, dividend streams didn't mean to ignore your question. So if you're kind of new to it and you're like, man, I absolutely want to be long on these shares and I don't want to touch them, just take a portion, 25, 30, 40% of those shares and get those collecting rent for you, fetching rent, and you'll get addicted to that premium and you'll never own a non-dividend paying stock. Free and clear again, you got to put that sucker to work for you.
Exactly.
You cannot have these shares. It's irresponsible, in my opinion. It's not financial advice, whatever you want to call it. It's just common sense advice. It's just irresponsible to own a company like SoFi at the levels that I do and not collect some cash secured put and cover call premium along the way, because there's much better, safer places to put your money. Tanner, you're a financial advisor, I believe. You wouldn't have people do this. You wouldn't be like, hey, go put all your nest egg in SoFi as much as you're convicted on it, because it's irresponsible to do so right now. It's early in the game, guys. I mean, it's the first inning of a baseball game with SoFi. Maybe going into the second, no more than the top of the third. It's early in the game. I heard Riley say that it's maybe a top 100 bank. Maybe right now, I think it's probably going to be more like a 125 bank. I think it'll be a top 10 bank.
It's already down to 114, so we're already past 125. So,
but it's going to be a top 10 bank. What? I don't know, 2030, maybe. I don't know. Tanner knows those answers. I don't care. I'm trying to make a bunch of premium along the way while the investment thesis plays out. And Tanner's going to let me know when it plays out or it doesn't. I just watch his channel, bro. I don't do any research anymore. I want to hear confess my sins to each and every one of you guys. You are my Sofi research. I don't do shit on this.
Remember, if you're interested in doing options, you should really research them. Don't just go by what we're saying here. And understand that when you sell a covered call, you have to be okay with the stock running up to that price and you losing your shares.
If you don't know how to roll.
But
Hey,
so
guys,
I have
guys, you can keep talking. I got
no. I got one more question. I got one more
I'm
question.
leaving. Just text me when the stream is done. Bye. Have a good one.
Okay.
Keep going.
I still have questions.
I have a hard stop too. Sorry, guys. Thank you, CJ, for coming on. That was
I'm going
I would follow you into battle.
TJ, we should do an options episode.
Okay. Good. Anytime, but I'd love to go on your channel. My channel's too small. I don't know how much I could offer you coming on mine, but I'd love to come on yours for sure.
I got some questions. Let's talk.
Go ahead, Tanner. Grill me, my man. And it was all in love when I called you a super dork, just so you know.
No, I loved it. That was like an amazing clip whenever it happened. So I really appreciate it.
But look how karma did me. Look how karma did me. I have glasses now. So
see, this is the problem with Amit leaving. Like now that Steven's gone, now this looks crazy. You got to shift over there, TJ. So okay, let me ask a couple of questions here, and then we'll go.
Sure.
First, as SoFi was crashing and the price was coming down, and you're putting a ton of capital on a price that you're willing to buy SoFi at. Let's say it was at 11 and you go, okay, well, if it went down to 9 or something like this. But then by the time that actually happened, the stock might have been at 7. Then you've made a quite a large risk there because now you have to pick up those shares at $9 rather than 7.
But you have the ability to change your mind and roll out of the contract. This isn't when Moses got given the tablets and the 10 commandments.
Get in the camera frame.
And it's set in stone, guys. You can get paid to roll out and up on a covered call or down and out on a cash secured put. So let's say I entered into an agreement to buy these shares at 750, just using the example from dividend streams earlier. If it goes against me, like, and all of a sudden something, whatever, another downgrade, the Wedbush guy is somehow able to move the market like he did, a month or two ago, whenever that happened. And that happens, I can go back, I can reassess the landscape, and I'd be like, hey, you know what? I thought 750 was a steal of a deal. It turns out that Mr. Market is saying $6 is a steal of a deal. So instead of July the 14th, I can essentially say, hey, I'm going to renege on this contract, Tanner and Tevis. And instead of 750 on July the 14th or whatever the expiration date was, we call them expiries. Let's see what it looks like in August or September. How much money would you pay me to roll out of this contract, buy to close this one, so to open the new options? And you might be able to pick up, if you got 27 cents on the front end, you might be able to pick up another 10 or 15 cents and lower your strike price from 750 to 7. And then you lower your risk profile that way, Tanner. And I do that. I have literally rolled positions, guys, for over a year before I got out of the option entirely. So people that are saying you don't want to write covered calls because these shares, you're going to lose your shares and all your upside potential, they don't know what the hell they're talking about, with all due respect. Because rolling is the silver bullet. I wouldn't be the real deal without my ability to roll out and up or down and out if it's a cash secured put, out and up if it's a covered call.
So
it
TJ,
seems like one of those too good to be true solutions. And that's really what bothers me about options.
Brother, and anytime you want me to go, man, I'm full of transparency. I'll go on your channel. I'll show one of the portfolios, get the wife's permission. And I mean, on my channel, I got 600 videos of the little $250,000 portfolio that we trade that we're up a pretty decent amount on. And all I do is I take a handful of stocks, I sell puts, I sell calls, I collect premium, and I do it over and over again until I manufacture the win, guys. And one thing that I learned a long time ago when I tried to debate in high school is that it's real hard to argue with results.
No, and so maybe I got a question for Tevis then. Like, I literally wouldn't even know what platform here in Canada would even offer me a reliant solution to bring down a price to even execute on these options.
Questrade. But the problem, so here's the thing, PJ, like we're both in Canada, and in Canada they have commissions for options trading, and it's like $20 per trade. So the reason I never did, I really realistically only do leaps. because I can buy pretty cheap contracts that could have high payouts that make it worth from an ROI perspective.
For sure.
Wheeling, selling, like actually writing calls, cash secured puts. I never did any of these because you always need a large amount of underlying shares to actually make it worth it. Like if I have 400,000 shares, of course it's a no-brainer because I'm literally pulling out somebody's
Right.
salary weekly. But
Yeah.
if you only have, let's say, I don't know, 5,000 shares or 1,000 shares, even worse, then I don't know what I could feasibly get out of that. And is it even worth the effort to get, I don't know, $50 a week or something like that,
So the percentages are all going to be the same, right? The only thing that we're talking about is zeros. So whether you have 400 shares or 400.
Yeah, but that's not true whenever you factor in a commission.
Absolutely. Like I don't know that I would enter into 2 cash secured put contracts unless they were annually, unless they were leaps. Because if I'm gonna have to relinquish 20 of these $27 to the brokerage just for allowing me to play ball, I'm not interested in playing ball.
I think Tevis and I on some of our positions have quite sizable positions, but yeah, I think maybe it's just one of those things like, I don't know. In Canada, it's just never been a solution for me. No one talks about it. No one ever does it. So I've just been holding shares, and I've still been like very successful doing that. And so I've never needed to. And I've always thought about the solution of, once my portfolio gets much bigger than it is today,
Sure.
that I'll absolutely look into it. But I don't have 400,000 shares of Sofi.
No, and I understand that. But I mean, we just wanted to take a number, say 1,000 shares, because there's probably a fair amount of people that are watching y'all's channel on a regular basis. I call them the Sofi fanatics, right? That's my little word. The Sofi fanatics. I think it would totally be worth it with 1,000 shares because that can make you some pretty decent money. If you were selling monthly puts on,
so, yeah,
on 10 contracts, you're talking about $350 a month.
So yeah, walk us through that, like with the real example.
$350 a month on 1,000 shares.
Correct. On cash secured put on cover calls. Let me put it on cover calls, and I'd give you the price that I would be looking at. I would be very, very conservative. At like say 1050. Yeah, that's going to bring you in about between $300 and $350 a month, with the ability to roll out and up, guys. Like I don't understand the mindset, guys. Like I want my shares to go up and I want to be in the hole and cover calls, because scrambling on cover calls is a positive problem. That means that the underlying is going in the direction that I want. It may be happening a little faster than I anticipated, but that's a problem that I'd be happy to deal with.
Yeah, so that might be a good strategy. So what? Okay, so I have so many more questions because I like.
It's all good, man. I'm here to help you out.
$350 on 1,000 shares. I'd be like, that's like a brand new revenue stream for me. I mean, I own thousands of shares of Sofi.
I believe it. Yeah.
So, that's crazy. Okay, so then I have a question. As it ran up from $4.50 to $10, and you had all this capital tied up in options, what did you technically lose in terms of if you had to just have that capital in shares? Did you ever calculate that?
What do you mean exactly?
So let's say you had $400,000 on cash secured puts that potentially were not buying shares, and then you were offering someone that you would want a premium on all these shares between, I don't know what time you said you do monthly or something.
I do weeklies, monthlies, quarterlies, and annuallys. Guys, here's the thing, man. I sell cash secured puts, and I start off with the leap put. So I'm a real bullish on Sofi, and right now I just wrote a ton of cash secured puts for January of 2024 at $750. So they pay.
Okay, but in those weeks and months that you have this capital tied up, you don't have shares.
For your question, because what you're talking about is opportunity cost. So what I do is I tied up a lot of money. I sold cash secured puts at $750 for January 2024, and then I take all of that capital and I sell short-term cash secured puts on SoFi as well. Like right now, I have a ton of cash secure puts that just went in the money at $9 with SoFi, and I got all of the money to be able to do that from the premiums that I collected on the 750 put. So we're not even talking about the compounding effect of this whole thing, Tanner. Like, I'd love to sit down and talk to you, man, because as smart as you are, once you were to grasp what I did for a living, just being just smarter than I would ever dream of being, you're going to make a lot more money than me, because that's just the way that God wired you. You're a numbers guy. And no, seriously, the wheel is a numbers strategy, guys. It is, all I do is I play a game of math. That's all.
Yeah, but I'm just thinking about it. So, okay. So from what, because I'm not all caught up on the terms, but what it sounded like is that you hedged your position.
Facts.
Okay. So, but hedging your position decreases your upside and your downside. So
when I say hedge my position is I got paid premium up front for agreeing to buy shares, and I got paid premium up front for agreeing to sell the shares. But when I'm legit long these sells, like all my covered calls, guys, the only thing that's in the money is about 100,000 of these shares at 750 for January of 2024. But here in about 60 or 90 days, I'm going to renege on that contract. I'm going to close all of those positions out for a loss. But then I'm immediately going to sell to open the $10 strikes for January of 2025. And I'm going to get even more premium than I had to pay back to get out of my 750 calls. So now for agreeing to sell that batch of shares at 750, I'm going to make a net credit to just change my mind and agree to sell them at $10. So now my upside just went up $250 a contract times 1,000 contracts or whatever it is.
yeah, I need to see some of it, because I'm like, I don't know. There's risk in everything you do in markets, and it sounds like a foolproof plan. And the second I hear that, I just think,
man, and you have every right to be skeptical. I was too. I researched, but I don't share on my channel a lot, guys, because I formed this persona, right? TJ the Wheel deal. It took me about 5 years to mold into that, because I've been a buy, hold, and hoper for 20 plus years in the stock market. Like, to me, anybody listening, guys, this is what I want to make sure that is ingrained in your brain. If you want to get wealthy in the stock market over time, just dollar cost average into a major indice. For the S&P 500, the VU, the SPY, the Qs, whichever one's your flavor, and just put in your 100, 200, 300 bucks a month, and in 40 years, your future self is going to thank you, because you're going to have done it. You would definitely buy math, just math. It's a game of math. You would be a millionaire.
no.
But
So I agree with you.
The indices. I found a way to beat the indices with this very simple strategy. Now, granted, I have quite a bit of capital backing me now, but whenever I first started with the wheel strategy, guys, I made it all play out with only 20,000 bucks. Because if I can't do it with 20,000, how are you going to do it with 2 million? Because your losses, I'm not trying to go to the school of hard knocks here, guys. Like, I wasn't going to put my entire life savings on the line on a whim. I'm just not that cavalier with my money. Some people might think I am, because they see the stocks that I'm wheeling, but it's just because the juice was worth the squeeze. I did the studying on the company, specifically Marathon and Riot and SoFi. Those are my biggest money-making players. And I knew that eventually, if these companies just stayed in business, the premium that I was going to collect was going to far outweigh the money that I was going to tie up on the shares that I chose to own long term. Like, what people,
it sounds like you make. Oh shit!
Go ahead, Tanner.
It sounds like you're making a really big beat on the markets whenever the stocks are staying stagnant.
That is, yeah, because you're making money on the puts and the calls simultaneously. The best situation for a wheeler is for the stocks to flatline. That's
right.
Why Tesla is so hard for me to wheel, dude. Like, I get my ass kicked on
but that's why I'm really having a hard time wrapping my brain around what just happened with the share price of SoFi and how that affects your portfolio. Because whenever something doubles like that, doesn't that completely?
It only affects it if I had expiries, if I had expiration dates during this time. But the majority, like 90% of my expirations, guys, are for January of 2024. So the stocks go up, down, and sideways, but that premium that they paid me up front is real, and I reallocate those funds. Like I sell puts on Palantir, Riot, Marathon. You know, there's a handful of stocks that I wheel. The people that follow my channel knows the stocks that I wheel on a daily basis, and I've gotten a lot of the plays from you guys. I mean, my Palantir play obviously came from Amit. My SoFi play, I was already in SoFi when you guys did y'all's first SoFi Weekly. But whenever that happened for me, I was like, dude, this is awesome. Because all of the stuff that I have to struggle to thumb through to find, I mean, Tanner's been an absolute blessing in my life. Obviously him not knowing, but all these damn Excel sheets, I don't know how many times I've had to screenshot those. Because I don't know how to put that shit together, Tanner. I cannot thank you enough, brother. Like, truly, brother, it is just, I've been an absolute godsend for me to be able to have access to all of the research that your brain is able to put for us here. And you just do it because that's how you're wired, because you're a numbers guy. But for people like me that have legit capital on the line on SoFi, that stuff is absolutely priceless, man. So I'm not wearing a hat, but hats off to you, man. I appreciate you.
Thanks, dude. I really appreciate that. That made me feel great. That made me feel amazing. Yeah, man. I think maybe we should
we could pull up Robinhood, because I think if you would be able to visualize it, it would just make so much more sense. But I know that y'all don't have Robinhood in Canada, right? But I think you'd still be able to see how it all plays out.
Yeah, because Amit's not in here, we can't control the stream at all anymore.
Oh, I got you.
So I'll message him to shut it down. But I mean, you know, let's have you on the channel or something. We'll do a podcast.
Yeah, let's do a separate thing.
Well, Tevis has my phone number, man. So shoot me. Was it you or Riley? I feel like both of y'all might have it. I'm not sure.
Yeah, no, I have it.
But man, just reach out to me on the 210 number, Tevis, and just let me know, or the tjthewheeldeal@gmail.com. I'd be happy to go on either one of you guys' channels. My channel's up and coming, guys. I only got like 1,200 subscribers. So, I mean, one day I'd love to have you guys on, because that would be like legendary, right? The SoFi guys are on there, but you know, I'm just trying to grow the community. That would be worth y'all's while as well. But I'd love to go on there, man, and anything that I can show people on how life has just totally turned around for me since I became the Wheel Deal. That's my gift to the world, man. I never thought I was going to have it this good. I truly never thought I was going to have it this good. And I looked Tevis in the eye that day at the barbecue place, and I was like, dude, is there anything that I can do to help you on your journey? Because that's my mission in life, is I just want to pay it forward. Because I truly never thought that it was going to be this good for me, man. And I'm being like as sincere as I possibly can with you guys right now.
I really appreciate it, man. I still am I'm just swirling with questions regarding the the change in price for SoFi stock, because I know that, potentially you made money, but like how much, like, if you were up 20% during that time and the stock actually went up by, 100% roughly during over the month, because there has to be some downside, and I can't go without believing that there's some downside.
There is definitely downside. If the stock were to go parabolic, if it were to go parabolic, let's say if SoFi went to $20 over the course of a week, I would be leaving a lot of meat on the bone. I would be leaving a lot of money on the table, because mathematically it would be extremely hard to roll. I could roll for a year, maybe even two, because I think the quad witching was today, if I'm not mistaken. And so there may be some new options chains. Like we may be seeing 2026 here pretty soon. So I could kick this damn can down the road, is what we call it, right? I can kick the can down the road as far as I can. But in order for me to roll up to a strike price that makes sense, because the market conditions have changed, I may have to relinquish a lot of that premium and then some that was paid to me on the front end. So there is absolutely potential downside. But if I think that SoFi went parabolic to 20, and I think that it can realistically fall back down to earth to say 12 or 15, then instead of panicking, I could just be like, okay, I got caught with my hand in the cookie jar. Is what I say on my channel all the time. You got me. Let me take my medication. I'm going to buy to close these options. I'm going to sell to open these other ones, readjust from say 750 strike price to $12, 2024, and let's see what happens. Or even 2025, and let's just let the market play out and let's see what happens. Because one thing I know about SoFi, she moves violent in both directions. So just as fast as she went up, Tanner, she'll probably go faster down. And that's just the facts. I mean, it's been earnings beats what? ever since they went public. I think they beat on the top and bottom each and every time, I think, maybe with the exception of once, and it goes up really, really awesome, and then it comes back down. It gives away all those gains, and then the next earnings report happens and it shoots back up, and then it comes back down, shoots back up, comes back. It's very predictable. It scares me now. But one thing that I caught on y'all's podcast earlier is SoFi finally has a lot of things that justify this move in the upward direction. I mean, just think about it, guys. And I got this from you. There's not a damn thing I could tell you all about SoFi that y'all don't know. But they took their number one product away, which was the student loans. And they backed SoFi into the corner. By the way, my wall's real. And I'm talking to Amit, not you, Tevis. But anyway, they backed them into the corner and they made them pivot. And what that did, it was a blessing in disguise, in my opinion, because it made SoFi a better company. Because they're like, okay, shit, they took our main thing away. So now we're going to get good at all of these things. We're going to figure out how to monetize all of these other products. And then whenever the student loans come back, how good can we really be? And I think that's why it's so euphoric around SoFi right now, is because this is going to be the first time in the company's history that they're going to be clicking on all cylinders. So people are willing to pay a premium for that. Deservedly so, in my opinion. Again, I push my buttons, I live with my results. You have to push your buttons and live with your results. But I place my bets on SoFi, but I can't just place my bets on SoFi and be ride or die with SoFi. Along the way, I have to figure out how to feed the family. And the only way that I know how to do it with a non-dividend paying stock is I have to sell puts, sell calls, and collect premium so that I can minimize the risk that I'm leaving on the table, because every share that I choose to own of SoFi is a share that I could have chosen to own in Tesla or in Apple. And I love me some SoFi, guys, but gun to my head, which one's going to make it? I fucking guarantee you the answer is not SoFi, it's Tesla and Apple. I mean, that's just the reality. I can only pick one between Tesla and SoFi. I love me some SoFi, but gun to my head, I have to say that the answer is Tesla. I just have to. I mean, we're talking about my life here, and that's the way that I look at my portfolio. So if I'm going to put my soldiers at war, at risk, my money, like little soldiers, like Mr. Wonderful says on the Shark Tank, and their mission is not to go die, but to go come back with more soldiers, I got to do that via cash secured puts and covered calls. That's the only way to generate income with that stock, because it's so hard to pick an entry point on these stocks, Tanner. You know what's harder? It's picking an exit point.
No, I agree. I said that today.
When you figure that out, write the book, brother. I want the first one, and I want you to autograph it, because I don't know how to pick the best entry points, and I certainly don't know how to pick the best exit points, but I can manufacture the win by collecting cash secured put and cover call premiums along the way and let the investment thesis play out. And then I can listen to the Tanners and the Tevises and the Rileys and the Amits of the world and all the people that are way smarter than I care to be. And you guys will let me know when the investment thesis is playing out. And that's just me playing poker and playing them all face up and putting my cards on the table, just using a little Texas Hold'em reference because I'm from Texas, right? So that's me playing it cards up for you, face up.
He really has been in sales his whole life. Yeah, you got the whole client talk down, breaking it down into your little soldiers. I love it. I appreciate.
I used to sell home security systems. ADT. I sold over 2,000 of those kitchen table. They used to call me the king of the kitchen table back in the day.
Well, okay, let's do this again. But for now, I got to run.
Me too.
I appreciate your time, TJ. Tevis, maybe we should do another little three-way and get a good podcast going, and you can sort of set us up with let's put some real numbers on the screen and show us, I want real numbers. Like you said, I'm a numbers junkie, so a lot of money sounds great, but I want to know like what really caught my ear is whenever you said 1,000 shares equals $350. That rung, so that's what I need.
I have a little podcast that I just started called Wheelers, guys, and I'd love to have you guys on there, and we talk all things wheel strategy. I'm doing it. The next one's this next Tuesday at 10 a.m. Central Time. I don't know what that is in Canada, Texas time.
Was that an hour behind or something?
Yeah, we're
think so.
Central. So we're an hour behind New York. Are you all the same as New York?
Yeah, we're New York.
Okay, gotcha. So if you guys ever want to come on that, or I'd be happy to go on y'all's channel, and I would love to show you guys all things wheel strategy, because I have said this over and over and over again ad nauseum. If smart people would start doing the wheel, look at what I'm doing with it. Imagine what you could do with it.
Yeah, no, I've been saying forever. I was like, I even told this with to Chris Patel. I was like, I'll find the stocks. You tell me when to buy them. Like, I wouldn't.
Smart, yeah.
The DD is where I lie. I wouldn't even call myself a great investor. And like the truth is, I like you said, I don't exit a lot of my positions, so I don't even know when the hell to do that. So
it's because Warren Buffett doesn't talk about that, because he says, "What, hold the stocks forever," right?
And that's my mentor. So I find great companies at great values, and I hold them till I die. So maybe you can help me get a dividend off my growth portfolio.
Man, I would love to, my guys. It's been an absolute pleasure, man. I'd love to have be on again, and maybe have you guys on my channel as well. My wife would like for me to grow that eventually, but it's such a neat product what I do, you know, selling puts, selling calls, collecting premium. Quite frankly, it's such a beginner-friendly strategy. A lot of it doesn't appeal to a lot of people, and there's a lot of misnomers. There's a lot of misconceptions about the wheel strategy, and that is why I started the channel, is to have a roadmap for my son first and foremost, but also to let people know, hey, the wheel strategy is extremely nuanced, and there's a lot of intricacies with the wheel strategy, trading it at the level that I do. So I'm ultimately just a buy, hold, and hoper that figured out a way to manufacture dividends along the way, because I tend to gravitate to the high growth stocks, the high beta plays.
Yeah.
They're risky. I mean, they're risky. I mean, the risk is here, the reward's here. It's great, it's exciting, but man, if you're really going to put your money at play there, you might want to formulate a strategy on how to do so.
All right, let's get out of here. That's all my time. So let's continue this another time. Thank you so much, TJ.
TJ, thanks for your time. Appreciate it.
Guys.